investigation. There's a lot of tax audits that are going on, investigation. E-Teams is one of the biggest compliance system that is pushing our businesses to be very compliant. So for you to have your business and you need to sell to your customers and they're asking you for E-Teams, it means you have to put your business in order. So a lot of tax audits, a lot of investigations are carried out every single day. Tax incentives and benefits from compliance. So when you become compliant, there are also other benefits that you get. For instance, for export business, you're refunded. There is special economic zones and so many other things. Even when you're compliant, you get a tax certificate. If you need to invest, if you need to borrow money, you can borrow money. If you need to have an investor on board, they want to see a tax compliance company. So they will be looking at taxes and how you've been running your business. Long-term financial health. When you become compliant, there's a lot of stability that comes to your business. You know that 10 years to come, 20 years to come, your business will still survive. Because if there's something that can collapse a business to zero, it's taxes. For instance, if you run your organization 5 years, 10 years, and then you get a tax demand that you cannot be able to pay, then it means that your survival of the business is at risk. So it is very important for you to be compliant. It will also help you secure loans, grants, and other financial support. So, and other support importances of being compliant, access to capital, we talked about that, enhances growth. If you need to tender today, tendering, mergers, whoever you're doing business with, they want to really see if you're compliant, operating with a peace of mind. And I think that is the greatest thing that you'd want for your company, that you can operate the business with a lot of peace of mind. So let's talk about the tax structure in Kenya. I'm going to just mention a few tax areas. I'll not be able to really explain in length. When you come for taxation masterclass, we're going to have a full day where we talk about payee, all the benefits, what it means, everything. And then the next day we talk about VAT, everything the next day. So it's a very important masterclass for you. But today I'll just mention something very, very small. So pay is a direct tax, and this is a tax that is remitted on behalf of the employee by the employer. And I know we know that. And when we talk about pay, we also talk about other deductions that comes for the employee. And those other deductions are NSSF, SHA, we have the housing levy, we have NITA, and we have pay. So when you have the employees, those 5 taxes and levies, you have to contribute them. When it comes to pay audits, KRA is looking for to see the casual workers that you're having in the organization, that they are supposed to be employees, but you're declaring them as casuals. So around that, the audits around the pay, most of the time are those wages and the casuals and the consultants. Some of us resort in having consultants in the organization, and those consultants are not even consultants, they are employees. But because you want to do the 5% withholding and not do the pay as you earn, you incorporate them as consultant. The moment you do those many withholding certificates, it is an audit trigger. And for a consultant, first of all, the rule that KRA uses, is this consultant has an office or a desk in the organization? Do they have a laptop given by the organization, an email address by the organization? What time do they come to this organization? And they judge that if this person is a consultant or is an employee. The moment you're even coming there on a daily basis, you have a desk where you sit, you have an email address given by the laptop, and everything that you use in there is provided by the organization. You fail to be an employee. You fail to be a consultant, you are an employee. And I find some of you making that mistake, and you keep paying this person for a full year, 2 years, 3 years as a consultant. The moment audit comes on board, you are charged. This person is now from graduated from the consultant to the employee, and then pays you. And guess what? The mistake is not charged on this person. The mistake is charged on the company. Remember, this person, you paid them and they left, or you keep paying them. But that mistake around employee, around the payroll, it will be charged back to the organization. So it is very important to see how you handle consultants and how you handle casual wages and casual workers. When somebody is in the organization and you're paying them above 24,000, graduate them to be on the payroll. When they hit 1 month, 2 months, 3 months, graduate them to be on the payroll. And if this person is on a casual wages sheet, make sure that you have the proper documentation. Have the wages sheet. That wages sheet that you're paying on a weekly basis, have their PIN number, their ID number, their phone number, the amount of money you pay them, and the number of dates, and let them sign. If you don't have that proper documents, KRA can decide to put those wages to pay as you earn, because you put wages there as 400,000, but you did not describe per person you paid them how much. And this person has been a casual from January to December. You're paying them, by the end of the month, you're paying them 30,000, 35,000, but you're still terming them as casuals. So those are some of the cases, and that's some of the areas when it comes to pay as you earn. So also pay as you earn as a director. As a director of the company, you're supposed to pay payee. So some of us say we don't pay ourselves. Yes, yet we come to this work every single day. That is a work that is surviving, is helping you, is earning you a living. So as a director of the organization, you're the first employee. So you cannot say, even today, some of us are running companies and we don't even have pay as you earn. You as a director, you're the first employee of the company. So have pay as you earn for your salary. If you do director fees, they are also charged taxes. All those allowances, that management fee, they are always charged taxes. So around that area, whatever you do, make sure that you do it properly. The final thing before I forget, I keep remembering, most of us do business where we withdraw money from the bank accounts as directors of the company, and you withdraw money to send to your M-Pesa or cash because you want possibly to do payments, but you withdrawing it, and on the bank statement, it is registered you're the one who is doing those withdrawals. I've seen so many cases, KRA terming that money as money you paid yourself and charging pay as you earn. So as a director, you should separate yourself totally from the business. Don't make those withdrawals or deposits. Some of us also do collections. We do cash collections, and you're just depositing money. You're depositing money. Remember, any money that you're depositing in that company account should be sales. So, but the most dangerous part is the withdrawal. Even if you are withdrawing money to pay for petty cash or to pay other things in the organization, KRA will term that money as money you paid yourself, and they'll charge you pay as you earn. So it's very important to understand that. Let's talk about VAT. And I know that you know VAT, and there's a lot of issues around VAT because we have e-teams and the outer population. So VAT and e-teams is something that is always emerging. When KRA first introduced outer population, We never thought that we'll get here where we are, where it is auto-populating without fail. And you cannot add or reduce. I don't know how you're faring on with the auto-population. But what I can share about VAT is extremely tricky, especially when you have turnovers. And especially now because of the issues of ITIMs. There are some of our organizations that have not been able to even pay VAT recommended by the auto-population sheet. And since the auto-population came to be very strict around November, December, January, the companies that would pay 500,000 per month, they are now paying a million plus. ITIMS is pushing compliance to the next level. And that was the nature, and that was how ITIMS was designed to do, to push our organization to be more compliant. And it is working very, very well. So for you as an organization is to sit down and say, if our business is pushed to 90%, 95% compliant, can we still make profits? Because some of us, how we argue VAT, we argue that 16% is your profit margin, which is very wrong. So some of us need to sit down and recalculate how we do our profit margins so that we are clear. What do we pay for 16% and what is our profit margin? Because if you calculate that 16% affects your margin, and without a population, you'll be paying a lot of taxes and making zero profits. So my advice right now, because in January and even now, if you check your auto population, there's a lot of issues. My advice to organization is look at your margins. Look at how your business survives with ITIMS, because I believe ITIMS is here to stay. Also, any organization that has VAT obligation, there are a lot of tax issues around VATs, a lot of audit issues, and a lot of queries on VAT. And because of that nature of ITIMS, there's a lot of a lot of our pins are being deactivated so much. They are being deactivated so much. So if so you can check how you also do that VAT. Make sure that you don't have those many issues, so that your VAT is not affected every month. Some of us this year, we shall be always at KRA asking why is your VAT not working, those special tables, because every moment you do a mistake, they just deactivate it. And then you start moving around. And before they reactivate those special tables, there's a lot of process that is being followed. So make sure that there's no mistake that you're doing. You don't have invalid invoices. You are paying that VAT on time. You're making sure that all your sales are on ITIMS and all your purchases are on ITIMS. Make sure there are no mistakes. Because the moment they deactivate, for you to be reactivated again, there's a lot of query, a lot of documentation you have to provide. It's like a total whole audit. And that is the formula that KRA want to use, so that ITIMS compliance is done. So I see this year, if your PIN will not be deactivated at least once, you'll be very, very good. But some of us, because of how we run our business, it will be deactivated. You go to KRA a full month or a full 2 weeks or 1 week, they reactivate it. Then you stay another month, they deactivate. It will be the nature of the day. So let's check how we are doing business, because that formula is here to stay. And I know some of you who have a lot of VAT and a lot of turnovers, you're really being disturbed by that formula. And some of you have even talked to me and you're like, we are so demotivated to do business in Kenya because of how even that compliance is really being pushed. I think that is a new norm. For me now, I think that is a new norm. And with that new norm that is happening, it's us to now comply with it. If we need to do business, then we have to follow that structure. Otherwise, I don't know which business you're going to do that doesn't have e-teams. Let's talk about corporation tax. Corporation tax, we know at the end of the year, you're supposed to show your company net profits, and you're supposed to do your taxes, corporation tax, and you're supposed to do that audit within 6 months. And right now we are doing audit for year 2024, and we are also your auditor, so we can do you a very good one. But when it comes to corporation tax, the biggest portion of work that you need to be able to understand is how you're able to.
If they are using but then they are going to supermarkets to campaign. They were asking people to give them receipts.
Corporation tax, the biggest area is how do you have your sales in order? Do you have your purchases and your expenses in order? Bookkeeping for corporation. Very well. Do you have your sales ledgers and purchases ledgers done well? Bank reconciliations and bank statement, are they in line with the sales that you made? So corporation tax, another thing, should be done by an auditor who understands tax. Yeah, it has become very sensitive in how we do representation and audit reports. So anything that requires so some of us, we consider profit and loss, but yet even KRA checks how we do our balance sheet. If you have a balance sheet that has a lot of, for instance, let me give an example, your debtors report becomes, your debtors report is, your debtors that you have reported on your balance sheet is like 50 million. But your sales there at the beginning of the sales, the turnover, the entire year sales is 10 million, yet your debtors is 50 million. Remember, those debtors are credit sales. So you have to relate debtors and sales. So they always have those opening debtors, how much was it? Closing debtors, how much was it? So they always relate the balance sheet items to under declarations. Debtors can show that you under declared. Your creditors, you cannot purchase and not sell. So if you purchase and not sell, then your stock should align with your purchases. So if you have an auditor who just do calculations without understanding the implications, then when the tax query will be there on your how you do your corporation tax, it will be quite heavy for you to be able to answer. And again, documentation is what is key. Corporation tax. So this is the scale. I'll share you the note. This is the scale for individuals, and this is a scale for individuals under pay as you earn, and under business. You know, those people who do have a business name and you're using your PIN for business. You're using your PIN for business. This is a graduated scale. And I always say, when you get to 300,000, you can see here, when you get to the 300,000, you get to 32.5%. Yet, if you have a limited company, it is at straight 30%. When you hit around 500,000, so it is straight at 32.5%. So when you start getting those profits, as an individual, as a sole proprietor, it's always good to graduate that company to limited company because it is at fixed 30%. But this one graduated has 32.5% and 35%. So also we have the withholding. This withholding should be done by professionals. You do the deductions as a company. If I come to you as a tax consultant, you're supposed to do the 5% withholding if you pay me above 24,000. So some of us, we pay auditors, lawyers, those trainers, and we don't do withholding. And when during audit, KRA will ask you for that money, and you will have paid that lawyer and he left, and then you'll be the one to pay the penalties. We have the rental. We have the rental. Apologies, I wrote here 10. It's supposed to be 7.5%. The monthly rental income tax is 7.5%, and 7.5% and 1.5% for housing levy. So for any person, any landlord that is doing monthly rental income tax, the MRI, you're supposed to do 7.5% on your gross rent. Then you do 1.5% housing levy on that gross rent, and you do it 2 separate returns. And this rule was introduced last year, and this year you're going to get a lot of taxes on that area. So if your landlord or you are a landlord and you did not pay a housing levy last year, you're going to get those calculations because already you did your MRI. So they are going to use the MRI calculations, those gross rents, to calculate housing levy, and they send you those demands plus penalties and interest. So for any person who is doing that, kindly comply with housing levy. Excise tax. So if you're selling excisable, if you're manufacturing excisable goods, then you're supposed to pay excise tax. So this is in categories, and excisable goods are like water, beer, wines. Those, they are excisable goods. So it is very important to understand and be able to be compliant. And excise tax is very, very, very audited, very audited. So if you, in the manufacturing of these excisable goods, it is very important for you to even have a sound tax consultant. Even if you do imports of those beer, and it's very important to have a sound tax consultant, because your company will always be audited, always. Anytime you ask KRA for excise stamps, they always you always go through an audit. So if they give you 10,000 stamps, when you go back, they'll tell you the 10,000 stamps we gave you a month ago, 2 months ago, account for that. So you're going to go there with an analysis accounting for that excise stamps. And after you account for those stamps, you're also going to account for VAT. Remember, excise also will also come with VAT. So you end up paying a lot of excise tax and a lot of VAT. So when you're even thinking of such a business, it's very important to also look at your profit margin and the market, because sometimes you find if you're not articulate on tax issues, you may end up even closing your business, because now tax becomes very, very expensive. You did not anticipate that. Most of the companies that do some of this manufacturing, they pay a lot of tax. So you have to be aware of that. Capital gain tax. Capital gain tax is levied on transfer of property in Kenya at a rate of 15%. And is on net gain. So if you buy land for 7 million, and this is about 3 million sale of land. So if you buy land at 7 million, after 2-3 years, you sell at 10. That 3 million gain, you remove any expenses, could be agency, legal fee, then you pay 15% of that gain. And if you don't pay, because sometimes you don't pay, during transfer of that land, because the buyer is going to transfer land and they are going to pay stamp duty. The moment they pay stamp duty and they transfer land, they are going to declare that today. So who sold? They are going to declare that PIN. And then KRA gets that alert that you sold land worth 10 million. And they will write you a letter asking you for capital gain tax. And this will happen after a year, 2 years, when you don't even have that money that you sold land. So it's very important to do capital gain tax on time to avoid those issues, and make sure that you have documentation for capital gain tax. That land valuation, the sales agreement, the legal fee, receipt, make sure that you have those documentation saved somewhere. Because after 2-3 years, KRA will come back and audit that capital gain, and you will not be having those documentation. So tax planning, let's talk about tax planning. If you have a question, you can ask me. If you have a question, you can ask me, and we can proceed. Let me just see your conversation in a minute before we proceed to the next portion. Someone is saying, I usually share my email, but never got anything. Co-hosts, make sure that you kindly, I know the reason, Rashid. I know the reason why, because you're not doing your email on the registration form. Kindly share your email on the registration form. Kindly. How can a business prevent its PIN from getting into VAT special table? A very good question, Faith. Do your VAT very well. That's all. Pay your VAT on time. Do it on time. Make sure that all your sales are on eTIMS, all your purchases are on eTIMS, and verify that invoice was remitted. So when the auto population is done, you can be able to view. The moment you put an eTIMS, it has a QR code and it has everything, but it was not remitted, so you can't be able to view on the other side. That will push you to the So before you pay your supplier, go online, go on VAT, on iTax portal, and verify that receipt. You can be able to verify that receipt, that invoice, before you even make payments, so that you can also protect yourself. So, and also make sure that there are no invalid invoices. There's a lot of VAT deactivation, a lot. I guess last week or 2 weeks ago, a lot. The KRA just did crazy deactivations. And remember, the moment your VAT is deactivated, you don't do business. Your business is at standstill, because you're not going to do any eTIMS receipt, because nobody is going to accept that invoice. Someone has a rental of 50. Is it an offense to declare the income in your annual return and decide not to do MRI? I prefer you do MRI, because the moment you declare in your annual return, first of all, you're not supposed to combine business income and rental income, because at the end of the day, that's MRI in the income tax. You're going to remove expenses and so many other things. So at the end of the day, you're not even going to pay due taxes. So for me, I would prefer you do it on a monthly basis, so that you not, and when you do it on a monthly basis, it's final. It's final. You don't do the income tax. So clarify the MRI below the 12,000 who have taken up mortgages can opt prior model. So for people who get rental to 288, I believe 288 is about 24,000 per month. And that is the threshold for pay as you earn. So remember, if someone is earning 24,000 and below, they are not supposed to pay as you. And similarly, if you're getting rent below 24,000, you're not supposed to do MRI. You're exempted from that. But anything above that, you're supposed to do the MRI. And you're not supposed to net anything, not the mortgage, not the expenses. So even if you have a loan, some of us, we receive rent of 100,000 in a month, and that 100,000 at the bank you're paying 120 or 130,000. Actually, you are adding more money to pay that mortgage for the house. KRA doesn't care. So that 100,000 that you received, 7.5% and 1.5% for housing levy. So at the end of the day, it's 9%. What is the reporting requirement for sole proprietor according to KRA at the end of the year? At the end of the year, you're supposed to do your business income, as a sole proprietor under your personal PIN and pay taxes due. And remember, if you're using ITIMs, because some of us are using ITIMs as sole proprietors to sell, make sure that even if you're not doing VAT, because there's ITIMs for non-VAT, the people are not on the threshold. Make sure at the end of the year, especially for 2024, if you did ITIMs, do not file any return. Declare that business income, put expenses, and pay due taxes. Pay due taxes. The notes are never shared. Gubesi, my co-host, we are going to fight with you. We always share, so kindly, I'll follow up on that. Kindly. I am VAT registered with. What is the implication of having expenses in the profit and loss? And these expenses actually true and paid for. They do not have VAT element, e.g. vegetables, but they have not been declared as exempt or zero in my VAT return every month. No problem, Nasibo. No problem. For VAT, you only input the ITIMS invoices, ITIMS purchases, and ITIMS sales. Any other expenses, don't input on that VAT. Those ones you consider at the end of the year when you're doing income tax. You're going to consider them at the end of the year when you're doing income tax. Remember, KRA had stated that they are going to disallow any expense that is not ITIMS compliant. They had indicated that for year 2024. And if you remember, the Finance Act 2023 was attested in the courts, and it was the Finance Act that introduced ITIMs. So we don't know if they are going to react. That is a tax trend. And if you keep coming, I'll keep checking. If they are going to be strict on making sure that all our expenses are ITIMS compliant, if they are going to disallow. But my feeling is that possibly for year 2024, they might accept. But for year 2025, I think with the auto-population and the push that is there to deactivate, reactivate special tables, so many things, I think we are getting where they stated that all our purchases and expenses should be ITIMS compliant. So we are getting there. If VAT right now, it's on auto-population only, without input of anything, we are getting to that point where now our corporation tax will be auto-populated. I don't know if we are ready. I don't know if we are ready for this new norm. I don't know how many of us are ready for that. How can I access notes? I indicated that you register on the registration link. Why are KRA charging housing levy yet we file MRI? How to file housing levy? I file MRI company, need return for corporation tax. So, George, that was declared last year around, I guess, March, where they insisted that now you have to do MRI on the housing levy. you're supposed to do housing levy on the rent. And that was introduced, and also doing MRI, also doing housing levy on turnover tax. So the areas that housing levy was introduced, first on payee, where we do 1.5%, 1.5% by the employer and 1.5% by the employee. So that is on payee. And then it was introduced on the rental, the residential rent, MRI, where you do 7% on MRI, 1.5% housing levy. Then it was introduced on the turnover tax. So for people who do turnover tax, 1.5% on your turnover tax, then 1.5% on your gross sales housing levy. So total 3%. So on those areas, if you do turnover tax last year and you need not do housing levy, you still get those and interest.